What's up, everyone? So we have an important notice out of the Depository Trust Company regarding collateral haircuts. Now, I know about these very much so. There's a lot of talk going around about how collateral is no longer worth anything. That's not the case. We're going to go through this real quick. And this reads, beginning May 2nd, 2022 for settlement date May 3, because T+1. This is settlement date as of May 3rd, 2021. DTC will update this list of current lenders to the joint DTC and NSCC committed 364-day line of credit facility with a consortium of banks, which is referred to as the LOC agreement. The list of current lenders to the LOC agreement will be updated to include Lloyds Bank Corporate Markets PLC, which is a new lender to the LOC agreement. As a reminder, to help manage intraday transaction blockages due to DTC's risk management controls, participants can, number 1, designate additional securities as collateral. Number 2, process delivery versus payment transactions that will generate intraday credits. Or 3, submit settlement progress payments via Fedwire. Participants can monitor their collateral monitor balance via the Risk Management Controls inquiry link in the Cash and Balances tab in Settlement Web. Okay, so as far as the lenders, we have the big banks, JP Morgan, Bank of America, Bank of China, Industrial and Commercial Bank of China, United Overseas Bank Limited, Royal Bank of Canada, Bank of Nova Scotia, Wells Fargo, Agricultural Bank, Santander, all the big boys, right? UBS, Citizens Bank, Credit Agricole, Goldman Sachs, State Street, and all that good stuff. Now, this is where the important stuff is. Appendix A, eligible collateral, all categories. So this breaks down the security type, the rating S&P, and the collateral haircut. So the way you read this is interest-bearing United States Treasury securities. You have a 2% collateral haircut with remaining terms to maturity of up to 2 years. And now a collateral haircut, all that is, it's over collateralization. The haircut itself is the difference in the market value and the collateralized value of these securities. So let's go to the definition real quick from the Fed itself. So, valuation and haircuts. Where possible, collateral is marked to market daily using information supplied by a pricing service. The lendable value of such collateral incorporates a haircut that reflects the liquidity and credit and interest rate risk of the asset. So the collateral haircuts are tied to those things. For assets that cannot be marked to market, a haircut is applied to an internally modeled fair market value estimate. Then Supernote 2 says prior to October 2009, for assets that could not be marked to market, a haircut was applied to the par value in the case of a security or to the outstanding balance in the case of a loan. So that's a haircut. Now, as far as the percentage, every security type here is listed and the criteria is clearly outlined. So the claim that collateral is no longer valued is absurd. Whoever's saying that clearly didn't read this. So what we're interested in is securities, right? So it's going to be all the way down here. Now, equity securities can be common or preferred, listed on a U.S. National Securities Exchange, NASDAQ, or a Canadian Securities Exchange. With a market price of $10 or more per share, it has a 25% collateral haircut. With a market price between $7.50 and $9.99, 30% collateralized haircut. With a market price between $5 and $7.49, 50% collateralized haircut. And then with a market price below $5, 100% collateralized haircut. Next, we have equity securities, as in warrants, rights, units, closed-end mutual funds listed on a U.S. National Securities Exchange, NASDAQ, or Canadian Exchange, with a market price of $5 or more per share or per other unit. So if it has $5 or more per share, 50%. With a market price below $5 per share, 100%. ADRs. All the good ADRs, baby. American Depository Receipts, traded over the counter with a market price of 5 or more, 50%. American Depository Receipts, ADRs traded OCC with a market price below $5, 100%. So there you have it. And here's some equity securities, common preferred warrants, rights, and units not listed on a U.S. National Exchange, NASDAQ, or Canadian Exchange. 5 or more there gets 65%. 5 below gets 100%. So there you go. That's basically how you read this. And then right here it says securities are assigned a 100% haircut if the issue has matured, the issuer is in bankruptcy, or the security is not priced by an approved DTC pricing model, or by a third-party vendor for a period of 3 business days or more. Number 2, DTC may reduce its risk by assigning higher haircuts, where applicable, to equity securities designated as highly volatile based on their historical price volatility. There you have it. Collateralized haircut changes. Very good.